On a new IPO listing as well, which is Sandhar Tech. It's the first numbers after listing, and Jayant Davar, the MD at the company, is now joining us. Sir, take us through the quarter gone by. There are no comparable numbers that we have. What was the performance like in Q4?
Well, we are quite happy with the results that have come out. So if I was to look at the annual numbers, we've grown by about 23% on a standalone basis in terms of total income. We've got an EBITDA increase of about 44.5%. EBT levels have gone up by 106%. So overall, all in all, I think year-on-year performance has been to our satisfaction.
Talk us through the improvement in realizations. What products earned you highest margins in the quarter gone by?
So our business is actually categorized in three different segments within the auto component arena. One is the proprietary items, which means these are items that we design, tool up and then manufacture and supply. This is the proprietary business, which constitutes about 60% odd of our business. Then there is the business which is the component kind of business, where we get the drawings from the customers and we deliver to that particular design. And then there is a business which is a tier half business, where we manufacture some, we buy some, assemble it and supply. That's what we call the automac business. So these are three different levels of businesses. In each one of these businesses, but especially so in the proprietary businesses, is where we've seen the growth come in for. This is where the high value addition parts are delivered. And as we go forward, this is the one that's growing. In the future as well, the new technologies that we are bringing in go towards the proprietary items. And we hope to see better margins coming out of this particular horizon, a journey of which has started in the year that we are discussing right now.
Hi, this is Nayanthara Jayant joining in from the New Delhi studio. You are a new market entrance. Like Pankaj said, we don't have much comparables. But, within 2 months of your listing, let's just look at your share price. It wasn't perhaps a big bang listing that you had been anticipating. There were volatile times. But look at your shares. It's grown by $100. What has happened in the last 2 months that investors have lapped up your shares? That's almost a 30% increase. And talk to us about the future. What is it that your shareholders can expect going forward? Obviously, something has happened in the company that they've liked.
So, Nayanthara, a couple of things. One is quite obvious of the fact that the money that we collected in the IPO has gone towards repayment of long-term debt. So, as we said today, we are a debt-free company insofar as long-term debt is concerned. This debt was costing us close to about 25 to 30 crores in terms of interest outgo. Now that has come to a zilch, which means that should be factored in as to how much we will deliver, irrespective of any growth in the year that is now running as we speak. In the last couple of months, we see the trends in the automotive industry to be as strong, if not stronger, than what we've seen in the last year. And we continue to be on a growth path there in almost the same levels, or in fact even stronger than what we were last year. If we were to put these two things together and you were to look at the pricing that you're talking about, I think it's very modest. In fact, it is much lower than some of our peers, or most of our peers in that sense.
Okay, so, this is also perhaps the first time, Jayant, that you're going to be able to talk to shareholders, analysts, TV viewers about a guidance for the full year. What can all of these stakeholders expect from Sandhar Technologies in FY19? Do you want to give us any guidance?
Well, the guidance that I can give you is, like I said, we should be looking at the same rate of growth. We grew by about 23% last year. That's a number we continue to grow even in the last 2 months that have gone by. We see no reason why that should change. Our order book looks pretty strong at this point of time. So there will be an operating leverage improvement as well. So if you look at the last year, when our capacity started to get utilized in the new investments we'd made, we raked up our margins by about 1.5%. We see that progress to improve as we go forward. We look at a healthy growth picture in terms of growth. Like I said, we grew 23% last year. We see no reason why it should be lower. It should be higher, in fact. And like I said, there is also a bulk of a downside play that comes in terms of the interest that we will not be paying any longer. So if you were to put these numbers together, they do come up to attractive valuations as of now, and much below our peers as we see it.
Okay, so we'll leave it at that, Jayant. Thanks so much for joining us. With that, look forward to more television interviews. So that's Sandhar Technologies. We don't have a comparable, but a decent quarterly performance, and we have seen the share price run up since the listing as well, and now you know why. It's thanks to the debt repayment.